Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 19th of May. Fed minutes, June hike still in play. The minutes of the April FOMC meeting communicated that a rate hike is still in play for the June FOMC gathering, and that the signals the committee sent following the March meeting were interpreted by investors as more dovish than expected. Specifically, most officials judged that if incoming data continued to improve in the second quarter, then it would be appropriate for the FOMC to hike rates in June. This caused the implied market probability for a June action to spike to 34%, up from just 4% on Monday. The dollar strengthened against its counterparts at the release, while equity markets declined on concerns that interest rates could rise faster than previously expected. Given the committee's signals for data dependency, we believe that the dollar is likely to be more sensitive to incoming data, at least in the run-up to the June gathering. At first glance, the committee considers market pricing towards the Fed's pace of normalization as too pessimistic, especially as international risks had begun to subside, according to the minutes. Some officials may want investors to reprice the possibility for a near-term rate hike in order to gauge the market reaction heading into the next meeting. However, given that something like that was not evident in the meeting statement, we prefer to wait for more Fed speakers, especially Yellen, before we assess the likelihood for a June hike. For now, our base case scenario remains that the committee is likely to hike once this year, and that September and December appear to be the most suitable months for the next rate move. Based on the Fed Fund futures, the next hike is now fully priced in for November from January 2017 ahead of the minutes. What is more, even if the data show improvement in coming weeks, the committee may need more time in order to feel confident that such improvements are durable. On top of that, Britain's referendum on EU membership will be held roughly a week after the June FOMC meeting, which in our view is likely to provide an extra reason for Fed officials to be patient. As for today, during the European day, we get the UK retail sales for April. The forecast is for retail sales to have rebounded following a sharp fall in the previous month. However, we see ample signs for a smaller than expected rise in sales. Both the CBI and BRC retail sales gauges continued falling in April, while the CBI index dipped into the negative territory for the first time in almost 3 years. Consumer sentiment indicators amplify the case as well. The TR Ipsos and the GfK indices for the month slid as well. This leads us to conclude that delayed spending decisions due to the Brexit referendum may have kept consumer demand soft. This is also in line with the Bank of England's latest inflation report, where officials noted that uncertainty is expected to weigh markedly on demand in the second quarter. As a result, a miss in expectations could cause the pound to give back some of Wednesday's gains. In Eurozone, the ECB will release the minutes of its April policy meeting, where officials stood pat following the barrage of easing measures at the March gathering. At the press conference after the rate decision, President Draghi stated that the bank's policy measures are working but need more time in order to show their effectiveness. After all, some of the measures introduced in March have not been implemented yet, which suggests that there may be limited discussion of further easing in these minutes, if any at all. This could keep the reaction in Euro muted. In the US, initial jobless claims for the week ended on the 13th of May are expected to decline notably, something that would cause the 4-week moving average to increase. The Philadelphia Fed Business Activity Index for May is also due to be released. We have two speakers on Thursday's agenda, Fed Vice Chair Stanley Fischer and New York Fed President William Dudley. Following the hawkish FOMC April meeting minutes and the comments by some non-voting members on Wednesday, it will be interesting to hear when they expect the next rate hike and how many hikes they see by the end of the year. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.